Massive week ahead of us, traders. Welcome back. I'm the Gold Digger. This week, I'm going to be looking at what we can expect from the US elections from my side, what we can expect in terms of a game plan for all the key data points that are going to be dropping, and what are the Fed going to do? What are those dirty scoundrels up to? Let's get into it.
I love gold so much that I even lost my genitalia in an unfortunate smelting accident.
Right, let's start off on Monday as we always do. Let's have a look at what's been moving the markets over the weekend and anything interesting to discuss. Nothing much has happened so far this Monday. I saw some bits about the war over the weekend. However, nothing has materialized just yet. We'll keep our eyes on it. Had some Eurozone PMI come out. What's the week ahead looking like? We've got some German data points and Eurozone data points that have just come out. We've got the US elections coming up on Tuesday, so things are gonna get squirrely. We need to look at that and keep it in mind always. Today, we have US factory orders. What does that mean? Factory orders mean that if a factory is getting more orders, there is more money to be buying stuff. And if there's more money to be buying stuff, that means the economy is doing really, really well. And if the economy is doing really, really well, that means that the Fed is likely to keep rates higher for longer because people can take the punishment. However, at the moment, we have a mandate, the dual mandate, focused more in on the employment. So this number for me is going to be important because if factory orders are going up, it means that factories are doing well, likely to hire more people. And that means that the Fed is likely going to keep rates higher for longer. So on Tuesday, the only US things that we have, of course, is the big US election all day. And then we have some data points on the trade balance along with the ISM services PMI. Again, trade balance is pointing to whether the US is producing more than what it is importing. If it is producing more than it is importing, that means the economy is doing well. And that means that we can likely keep things a little bit higher. The ISM. So the Purchasing Manufacturers Index, they are likely going to be the first ones to feel any knock-on impact of rifts in the economy, tailwinds, headwinds, things like that. And so we'll generally look at anything over 50 being a bullish sign, anything under 50 being a negative sign. We have been in major positive for a while. So on Wednesday, not much for me to trade other than crude oil inventories. It's especially important this time with regards to the conflicts that are going around globally. So I'll be paying special note to that. However, there's no major moves for me. So on Thursday, we have the big one. We have the interest rate decision. Are we going to be reducing more or are we going to be keeping rates the same? And at the same time, we have a very interesting data point on the same day. We have the initial jobless claims. The Federal Reserve at the moment have felt that they have inflation under control. And so their second part of the mandate kicks in, which is max employment. So this number for them is particularly important and it's something to watch quite closely for the week. Friday, we round off with some Michigan sentiment, blah, blah, blah. Hopefully this gave you some sort of game plan that you can plan out your week and your trades. Always pair this up with technical analysis. Look at levels on your charts, look at your 4 hours, your dailies, and all the support and resistance levels that might be tapped during these points, and then wait for the data to come out. Don't predict, react to the data points. I've given you a game plan. Good luck with yours. I hope you have a great week. Much love. Peace out.
I love gold so much that I even lost my genitalia in an unfortunate smelting accident. Smelting accident. Smelting accident. Smelting accident. Smelting accident. Smelting accident. Smelting accident.